in a development igniting intense speculation across financial and crypto markets. Prediction market platform Polymarket has signaled a 60% probability that the United States will establish a strategic Bitcoin reserve in the coming years. This crowd-sourced bet driven by traders, analysts, and institutional investors is far more than speculative guesswork. It's a real-time gauge of market sentiment reflecting a profound shift in the global perception of Bitcoin's role within sovereign finance. The concept of a national strategic Bitcoin reserves, analogous to reserves of oil, gold, or foreign currencies, has circulated among crypto visionaries for years, but has gained unprecedented traction in 2025. Today, this environment combines political, economic, and geopolitical factors that make this scenario increasingly plausible. First is the precedent set by El Salvador, which has held BTC on its national balance sheet since 2021, proving that nation-states can integrate crypto assets into macroeconomic policy. Though El Salvador is a small economy, its bold move opened the door for serious discussion in larger countries. Second, Bitcoin's legitimization as an institutional asset in the US has accelerated exponentially since the approval of spot ETFs in 2024, followed by broad corporate adoption led by Strategy Inc., formerly MicroStrategy, which now holds over 220,000 BTC in treasury. This shift transformed BTC from a speculative instrument into a recognized store of value for regulated entities, creating a direct precedent for public sector adoption. Moreover, the global fiscal and geopolitical landscape strengthens Bitcoin's strategic appeal. With the US dollar under long-term pressure from soaring sovereign debt now exceeding $35 trillion, the potential erosion of its status as the world's reserve currency and efforts by China, Russia, and Saudi Arabia to bypass the SWIFT system the US may view Bitcoin as a tool to diversify its monetary sovereignty and reinforce its technological leadership. Polymarket, renowned for its accuracy in forecasting political and economic outcomes, including Fed decisions, elections, and regulatory shifts, operates on information markets. The more capital flows into a prediction, the stronger the collective confidence in that outcome. The 60% probability is not arbitrary. It incorporates signals such as statements from Bitcoin-friendly lawmakers, congressional hearings on digital assets, and even rumors that the U.S. Treasury is already modeling allocation scenarios. While the U.S. government has made no official announcement, the mere fact that this hypothesis is being seriously considered by market participants shows that the boundary between traditional monetary policy and crypto innovation is dissolving. It's important to note that a strategic Bitcoin reserve would not necessarily mean the U.S. buying millions of BTC overnight. The most likely model would involve retaining BTC already seized by the government, such as the 191,000 BTC from the Mt. Gox case, currently held by the Department of Justice. Gradual purchases through fiscal budgets, potentially funded by crypto capital gains tax revenues. Or even the creation of a sovereign digital fund, managed by the Treasury or the Federal Reserve. With public transparency and independent auditing, such a move would have massive implications. First, it would definitively validate Bitcoin as a sovereign digital commodity, virtually eliminating long-term regulatory risk. Second, it would trigger a global race, with other nations rushing to avoid falling behind, just as occurred with gold in the 20th century. Third, it would artificially tighten Bitcoin's scarcity, as national reserves would likely be long-term and non-tradable, further reducing the liquid supply. Nevertheless, significant obstacles remain. Bipartisan political resistance, historical skepticism from figures like Janet Yellen, and concerns over volatility and cybersecurity are real barriers. Additionally, holding Bitcoin as a strategic reserve would clash with the traditional view that only gold and strong fiat currencies deserve such status. Yet the mere fact that Polymarket, a platform powered by informed capital and real-time data science, a 60% probability to this outcome is itself a milestone. It signifies the mainstreaming of a narrative that has moved beyond crypto forums and into the strategic planning rooms of banks, investment funds, and governments. In summary, regardless of whether the US actually establishes a Bitcoin reserve in the near future, the fact that this possibility is now seen as more likely than not marks a historic inflection point. Bitcoin has ceased to be just internet money and has become an asset of national interest, discussed not by enthusiasts, but by geopolitical strategists. And in this new chapter, a 60% chance is already more than enough to change the world.